Yes, yes. So, am I audible? Hello.
So we are live now.
Hello.
Hi.
Hello. Am I audible?
Yes, Satvika, you're
Satvika,
audible
yes,
now, and we are
you're
live
audible,
also.
but I'm not
Yes,
sure if
ma'am.
it's my internet.
So, now we will move
Yeah.
on to question 2. What is one way you used in the last year your money that you feel particularly good? I will again repeat the question. What is one way you used money in last year that you feel particularly good about?
Tracy says stock market investment. Good to know.
Is there any other one who would love to answer? Parvati, Sejal, Lakshmi. Vijaya says,
Bhavna says tax is waste. Good way is on my learning travel. Okay, nice to know, Bhavna.
so thank you everyone for your lovely response. Now let me introduce you to our today's speaker, CA Swati Singhania. Swati is a chartered accountant, insolvency professional, entrepreneur, and a financial analyst. With over a decade's experience, having worked with companies like Lind Limited, Chrysler Limited, a qualified chartered accountant, and a company secretary. Swati has co-founded Singhania Associates, having helped several companies. Over to you, Miss Swati.
Thank you so much, Satvika. Um, I'm I'm praying that my internet gives respect to this, to my time commitment. Okay, hello everyone. Hi, good evening. Thank you so much for joining in for the tax session. So the main agenda of today's session is to help answer questions that you may have in relation to the new tax regime. There is a lot of there's a lot of excitement, and I would also say craziness that has been created around the new tax regime. But if you really ask me, it's a simpler tax regime as compared to the old tax regime. Okay, so let me just Satvika, if you can please allow me to share my screen, I will quickly go through some slides, and then what we would try and do is we'll try and answer as many questions as possible that we get from the Zoom session, or if there's any audience in our live session that would want to ask us questions, we would try and answer that too. So, Satvika, can I share my screen, or if you can please share the PPT? So let's understand why we need to do tax planning. So we all know that, yes, tax may look like a waste of money, but the fact is it's a reality. Whether it's a waste of money or it's a good utilization of money, it's ultimately a reality of our lives that we have to accept even if we don't like it. Now, we all know that the government needs money to function, to maintain the country, to ensure that the admin, the defense, the law and order, and also a lot of subsidies that the government keeps giving are done. And for that, money is needed, and money comes from income tax. Though income tax is one of the big sources, it's not the biggest sources for the government of India, but obviously it's a substantial source, so it does matter. Now, coming back to the tax planning that we need to do. So we all need to pay taxes once a year. But if you know what your tax liability is going to be during the year, you can plan it, average it out in the whole year. So for example, if I have to pay 60,000 rupees of income taxes, I can pay that in March, one lot of 60,000, or I can ask my employer, which is if I'm a salaried person, or in case I'm a freelancer, or in case I'm in my own business, I can plan my taxes accordingly, that I pay quarterly taxes of roughly 15, 20,000 or so that by the end of the year, there is not a big lump sum tax that I have to pay. It's averaged out over the whole year. And that is why we need to have tax planning in addition to our, in addition to our financial planning. Now, let me quickly share my screen with you guys so that I can share the slides that we made for you guys. Okay, so this is obviously the main topic for the session today as to the new income tax rule that is there in our country. As I was saying, the only thing that you can be certain about life is that one day we all have to leave, and the second is taxes. There's no escaping any of that. Now, a lot of mistakes that we do about tax planning is that we actually make this a huge, we make it a bigger problem than a problem it is. So what really needs to be done is we need to plan our taxes. We need to know what is the amount of taxes I actually need to pay during the year, or at least plan approximate of it. Ensure that you invest in the correct product which can help you save taxes. So a lot of misinformation is also available on social media. I do create some content on Instagram, and I can see the amount of misinformation that is also available on Instagram. So for the sake of because it was given on a reel, or because it was given on an article, or because it is given on a blog, please don't go ahead and believe everything that they say. Do your own due diligence, do your own checking before you invest in that product that they are talking about. All the acts, which includes income tax, which includes any other, let's say you are a business owner, then Companies Act, everything is available online. So anyone who mentions any section, go ahead and read that, or call up a friend that you have, or drop in to a comment to someone that you really appreciate and look up to, and I'm sure they would answer your question. And also, a lot of times we don't even use the slabs that we are available, the sections that we are available to us. So I mostly give this an example, like, let's say you are given one big loaf of bread, and you are said that you are going from ground floor to 10th floor. The amount of bread that you are left with on 10th floor, the government will take 30% of that as tax. But when you're going from ground floor to 10th floor, there are a lot of windows and small, kind of holes that will be available where you can hide your bread. And so you can save some amount of bread before you reach the 10th floor. If you miss any of those windows, or if you miss any of those holes for hiding your bread, then it's your mistake. It's not the government's mistake. They have given you those options to save your bread, so that by the time you reach the 10th floor, you are left with lesser bread and hence lesser tax, right? So you're saving these in small windows, so that whenever there is a need, you can just go back to your hiding place, pick up that bread and feed yourself. So that's the best example that one can have for tax planning. Now, these are windows which are created by the government. ऐसा नहीं कि आप tax की चोरी कर रहे हैं. The government is telling you कि ये options है, ऐसे आप tax बचा सकते हैं. So why not use those options and save taxes? So I've explained you well enough that why do we need to do tax planning, so that at the end of the year, we don't have a big amount of tax paid. So last year it did happen with one of my clients. So what she did was, actually she asked the employer to not deduct any amount of TDS, because she said, मुझे TDS नहीं कटवाना है, आप मेरा कुछ भी TDS नहीं काटिएगा. So obviously during the year, there was no TDS that was deducted. She gave some declarations that no TDS is to be deducted. Now, when she was filing her income tax, she had to pay 2.5 lakh rupees of taxes, because she had this huge freelancing income. And she didn't have any money left in her bank account at that point of time, because everything was SIPs and everything was done. So now you see, in a case like that, what do you really do? These are primarily the differences between financial planning and the tax planning. A financial planning is to keep your financial goals in mind. What amount do I want to retire with? What am I saving with? What are the assets I want to invest in? Tax planning is what is the amount of tax I need to pay? How can I try and save it? And how can I try to pay it during the whole year so that my the burden of paying it at one go is less. Now let's talk about the new taxation system, which is obviously the talk of the town. It has been the talk of the town for the past 2 months now. What really is the new tax regime? So the top few questions and the top biggest asked questions that I can talk about new tax versus old tax regime, I'm going to answer those questions right away. First, the new tax regime is coming in, but the old tax regime is also going to stay. It is not that it is going to get abolished. No. So we will have parallelly two taxation systems when it comes to income tax. Both are going to exist parallelly. You have an option of choosing new income tax regime, or you have the option of choosing the old income tax regime. Okay. When do you need to choose the new tax regime or the old tax regime? There are two options. If you are a salaried holder, at the beginning of the year, your employer asks you to sign a declaration as to what are the investment that you will be doing, what are the tax planning exercises you are taking, what are the ATC investment you are doing, and what is going to be your taxes at the end of the year. If you are a salaried person, your employer will take this declaration mostly during April, that is the current month. So if you are a salaried person, you need to decide it right now, that what option do you need to take, the old tax regime or the new tax regime. But if you are not a salaried person, you are a freelancer, you're a business owner, or let's say you derive your income from your family wealth also. In situations like that, when do you need to decide? You need to decide it when you're filing your income tax return, that is July. However, you can't wait till July, right? Because the whole year will be over. So you need to decide it as soon as you can so that you can plan your investments in the tax planning investments accordingly. So for example, let's say insurance. Insurance gets you, life insurance gets you benefits under ATC. Whether you have to do insurance or not, or let's say whether you have to do PPF or not, is something that you can decide right now only, so that you can start investing every year, every month, every quarter, as your income allows you. So these are few options. When you choose new tax regime, can you go back to old tax regime? The law is not very clear on it. However, it is not going to be very difficult. You can even go back to old tax regime if you have started investing accordingly. Is new tax regime beneficial? New tax regime is largely beneficial for people who are not on the higher income bracket, and also who don't want to do any amount of tax planning investments, who don't want to invest in PPF, insurance, medical insurance, you don't want to invest in all that, then the new tax regime is more beneficial to you. However, if you are a savvy investor, if you are someone who likes to invest their money, and you are also on a slightly higher income tax or income bracket, then the old tax regime will be more beneficial to you. Now, as the screen is showing, you can see the slabs. Now, what are the slabs? Slabs mean कि आपकी income किस level पे है और उस पे कितना tax लगेगा. So up to 2.5 lakh rupees, both are saying no tax. As soon as you cross 2.5 lakh and you reach 3 lakh, the old tax regime says 5%, the new says no tax. Between 3 to 5, both of the regimes say 5% of the income tax. Now, as soon as you cross 5 lakh rupees, the old tax regime says 20% and the new tax regime says 5%. In spite of this, the old tax regime will be more beneficial if you have started investing in ATC, etc. I will explain you during the next few slides. And as you go up, so if you look at it, the actual percentage of income tax is lesser in the new tax regime. But the overall benefit that a person gets is more in the old tax regime because of the deductions and the investment options that are available in the old tax regime. Okay. Now there is health and insurance cess, which is available to both. There is a difference in surcharge, but it is only for people whose income is above 50 lakhs or so. Till then, there is no difference as such in the surcharge. Now, that's exactly what I was mentioning, what is written in the slide here. So any questions on this slide till we move to the next slide now? Okay. Okay. Now, one very, very important understanding that you need to have when you are deciding between the new tax regime and the old tax regime. So what really, when you are deciding the slab, okay, the slabs, for considering the slabs, your taxable income is considered. Not, so for example, your salary may be, let's say 10 lakh rupees, but you are investing 1.5 lakh rupees in ATC and you have 50,000 of standard deduction. So what will be my taxable income? 10 lakhs minus 50,000 minus 1.5 lakh rupees. So that's 8 lakh rupees. So I may be drawing an income which is much higher, but if I'm doing proper investments and if I have taken tax planning exercises, then my taxable income will be lesser. So if you see, your gross total income is a submission of all the incomes that you may have. You may have income from salary, you may have income from business or profession, which could be freelancing income also. You may have income from house property, which can be rental income, which can be any other form of income from house property. You can have capital gains. So someone mentioned that investment in equities and investment in mutual funds and investment in house property, which you are selling. All this comes under capital gains. And income from other sources could be various other forms of income. So for example, if you're a gamer, it comes under other sources. If you're drawing income from, if you go to Kaun Banega Crorepati and you win 1 crore or 5 crores, this comes under other sources. So other sources also includes income from your bank interest, interest from your fixed deposit, etc., etc. So everything, all of these income clubbed together, added together is gross total income. After that, what we reduce is the deductions under chapter 6A. Now, what are the deductions under this chapter? It's ATC, which obviously keeps getting talked about too much. Then there is ATD, which is medical insurance. Then there is we will talk about deductions also in the next few slides. So there are so many deductions that are available to a person. Now, till gross total income, there is largely no difference between the new tax regime and the old tax regime. But as soon as we step into the next slab, which is deductions, there is a huge difference between the two. So let me go to the slide. So you see the deductions which are available in the old tax regime. These are the various deductions that are available in the old tax regime. In the new tax regime, there's literally no deduction available except investment in pension, NPS, which is also only in case of salaried people. If you are a freelancer or a business owner, then you don't get this also. So this is the main difference between the new tax regime and the old tax regime. All deductions like ATC, medical insurance, donations, rent paid for your house accommodation, or your education loan, interest on education loan, all these deductions are not available when it comes to new tax regime. So this is the biggest difference between the old tax regime and the new tax regime. If you can understand the difference between this, I think you have understood the two differences. So after you remove deductions from the gross total income, that's when you get your taxable income. Now, this taxable income is used to calculate this slab. That's how it goes. Is it too confusing, or is it okay for you guys to understand? I hope I'm trying to make it as simple as possible, but so I hope so. So gross total income is arrived after adding all your incomes together. Then you come to deductions. Then you come to taxable income. And after that, there is something called rebate under 87A. Now, 87A says that after doing all this drama, if your income in the new tax regime and the old tax regime. So in the old tax regime, if your income is anything 5 lakhs or less, you don't have to pay any tax. And in the new tax regime, okay. And in the new tax regime, if you have your taxable income after doing all this drama is less than 7 lakh rupees, then there is no tax for you. Okay, that's one section 87A says. It's like, hey, I know you've climbed up to from 0 to 9th floor, but before you reach up to 10th floor, let me give you a last lifeline. Let me give you one last opportunity of saving more taxes if possible. So this is largely a benefit which is given to small taxpayers. Even if your income is 5 lakh 1,000 rupees taxable income, then you have to pay taxes. But if it is anything 4 lakh 99,999 rupees, then you don't need to pay taxes. Okay. I've already explained it. Obviously, I'm assuming that if you have understood taxation a little bit before, you would know most of these deductions. However, if there's any deduction that you really want to understand, please drop in a chat. I would explain that to you. I want to make it more interactive than me just talking about showing the slides. So I'm just kind of giving you a brief snapshot. Now, see, why I've taken this example is that if you really want to invest and save taxes, or if you want to do your tax planning, then using the old tax regime will help. Using the new tax regime is not for people who want to plan and live. New tax regime is mostly for people who don't want to plan their taxes, who don't want to do much investment. They just want to earn, pay tax, and get over with. So that's what new tax regime is for. But if you are following the old tax regime, if you are drawing salary, then there are various options through which you can save taxes. And HRA obviously is one of them. Anima, please go ahead and ask a question. You want to chat it? Do you want to write it in the chat box, or you want to unmute and ask?
No, I'll just go ahead because it's a long thing to type. So suppose I wanted to have one question now. Suppose if you have the housing loan on both the, like me and my husband both own the house, right? And both of us have taken the loan as well. Now, when it comes to income tax in this case, how do we go about it? Like, how do we take the reductions, reductions in income tax?
Right. There are two things that you need to remember. The house should be jointly owned by you and your husband, right? Yeah. Both of you should be the owners of the property. And most of the cases, it is 50-50, as in half-half. Aadha unka, aadha aapka, kind of a thing. And the home loan that you have taken, is also getting paid by both of you together, or let's say equally. Now, the best part about home loan is that you get benefit under 80C, and there is a section called 24, under section 24B, where so the principal that you pay for your home loan, you get a deduction under 80C. And the interest component of the home loan, you get deduction under section 24. Now, both of you can enjoy that benefit. So 1.5 lakh rupees for your husband under 80C, 1.5 lakh rupees for you under 80C, and 2 lakh rupees for you under 224, and another 2 lakh rupees for your husband under section 24. So if you guys jointly own the property, both of you guys can enjoy the benefit as far as your EMI and your interest component during the whole year is more than what you are asking a deduction for. So for example, if your EMI the whole year, mostly EMIs are not that less, but let's say you don't have much interest component in your EMI, it's only 1 lakh rupees. That only 50,000 can you claim, half of it. But the maximum that you claim is 2 lakh rupees each. So both of you can enjoy that benefit.
And if the interest component exceeds 2 lakhs, can we carry forward it to the next this thing?
No, that you cannot. During this year, see, in home loans, you obviously pay more interest in the beginning and much lesser interest at the end of the tenure of the home loan, right? So let's say in this year, for example, if I have taken a home loan, let's say you and me have jointly taken a home loan, and during this year, we are paying total interest on a home loan of 10 lakh rupees. So that means 5 you, 5 me. But we can only claim 2 lakh each. The balance will not get carried forward. In the next year, if there's barely any interest, then we will only claim what is available. We can't carry forward from this year to the next year. It's not like capital gains that we can carry forward.
Thank you. And if we don't pay the loan, like I'm not earning that much, it's my husband who is paying the EMI, or one of us is paying the EMI, but the EMI is going from a joint account. Will that work?
Right. Yes, it does work. However, it does get slightly complicated, less from an income tax point of view. But if you actually don't have any income, then sometimes it may be difficult for you to prove that you have been paying the interest of it. So a good idea is that you create you have some income in your books, and then you pay the EMI from your joint account. I think you also contribute in the joint account is what I'm trying to say.
Yeah. Okay. Thank you.
I had one more question. Do we have an option of choosing old or new? No, Vijaya, no. It is not compulsory that you have to follow the new one. What the government says is that they want you to follow the new tax regime. If you ask the government, they'll say, we have made this as a default option. But when you go to filing your income tax return, the option that will come automatically is new tax regime. But you can always go and choose the old tax regime, even for 2024, like the financial year which has started, and even for the financial year which has just ended. New tax regime was available then also. New tax regime is available now also. It has just been it has been talked about a lot because during this budget, the government spoke about it a lot. But you have the option of choosing the old tax regime in any of the financial years. Which means if I'm paying EMI of less than your annual EMI, how much it is, and then you can only claim maximum of 1.5 lakhs under 80C and 2 lakhs under Section 24. So kind of 3.5 lakh rupees. But 2 lakh is only interest and 1.5 is only principal amount annually. Okay. Yeah, great. So if you have more questions, otherwise I can just skip to the, but yeah, okay. So these are some of the, the main differences between when it comes to the new tax regime and the old tax regime, and obviously a lot of confusion that has been going on. I will give you an example. I will show you an example on a very easily accessible website. So what I did was I actually wanted to find something there. So what I actually did was I'll just show you. I'll just simply go to Google and I'll show you how to choose for how to actually decide the income tax calculation. Okay, 1 minute. So what I'm going to do is I'm just going to Google, and this is what I did. You can see my screen, right? New tax regime calculate. Okay. Come on, my internet support. So I'm just going to switch off my video. Yeah. So I'm clicking on this Clear Tax website, which says, just give me a yes on the chat box if you can see the website, the Clear Tax link that I've just opened. Okay. This you see the yeah, okay, great. Yeah. So very simple. So what you need to do here is I have chosen Clear Tax because this is a tool which is available on internet for everyone, freely available. They made it available. It is not a brand promotion exercise. I just did some search and I found this to be most simple because they have not included a lot of data. They have made it very, very simple. It's more like a thumb rule check. So financial year 23-24, I'm assuming all of us are between, we are not senior citizens. Now here is where you play with numbers. So let you have a salary of 10 lakh rupees and you don't have any other income. So what you do is you just go to next step. You have invested 1.5 lakh rupees in ATC. You have not done, but medical insurance, you've done 25,000 rupees. Interest on home loan, you have, let's say 2 lakh rupees. Okay, this is section 80 EEA, which is not related to normal loans. So you see, it gives you what taxation difference. So total income is 10 lakh rupees. For the old tax regime, what you get is a taxable income of your actually tax of 70,000. And for the new tax regime, you are paying a tax of 52,000 rupees. Okay. Now I'm just going to go back and play with numbers more. Now, let's say I have here. Okay. Now let me just calculate. Now you see the old tax regime, suddenly my tax is much lesser in the old tax regime as compared to the new tax regime. Now, if I am on a further higher salary bracket of, let's 12 lakhs, okay, and I also have a rental income of 1 lakh rupees annually. Sorry, here you can actually pay interest paid on home loan. So here you pay right interest, and I remove here. You see the income tax on the old tax regime is 85,000 and in the new tax regime is 1 lakh rupees. So this is not a foolproof taxation method that Clear Tax has given. There are few things that are available here. But if you really want to make a quick check, so let's say you have a new job offer, you are getting 10 lakh rupees and your job offer is at about 10 lakh rupees and you need to figure out how much more taxation you will have to do. This is a quick check. This is a quick hack that you can use. Okay. Does anyone want to give me their numbers, a little salary or whatever, and so that I can key in here and check how much taxation you will have to pay? Do you want to do that in the chat box or just say it loud for me? Okay. No one. See, because this is actually for people in salary, people who are in job. In case you do not have job, in case you have a business, then this quick hack will not work for you because then you have income from business and not income from salaries, right? So I shared this because it's a very quick hack for you. Let me quickly do that again. Lovely. 1 second. Okay, so Loveleen, I'm assuming you are a salary investor and you do not have, let's assume you don't have any rental income, but you do have a house loan and you are doing all the deductions possible, right? You are also doing NPS. So you're in the old tax regime is 10,60,000. However, for the new tax regime, you need 7,000. 1 second. What this calculator does not give you is that it is treating both salaries together. However, under old tax regime, if you are on a tax bracket like that, or all of us will have a CTC, you do have a breakup to your salary as to how much is HRA, how much is LTA. You have these breakup to you. So these are options available where you can actually save further more tax and tweak it more for you. Much more calculators available. Probably during the day, I will comments as to what are the other links that you can go and check out. of various other new tax regime versus old tax regime taxation comparisons available, right? But this was more for you guys to get an idea as to, okay, fine, this is the difference that works, right? I can talk about capital gains, but you guys have more questions for me before I jump into the next. Okay. Let me finish capital gains and then we can take some questions, I think, which Harmony had received earlier. Capital gains tax is basically what you need to pay in both the scenarios. As I explained you here, you remember this thing here is capital gains. So income capital gains is calculated and it is added to your gross total income. Now, what is capital gains? Every asset that you are selling has profit on it. And when you sell your assets, that's where you pay capital gains tax. It's as simple as that. Now your asset can be your house, your jewelry, it can be a painting that you invested in, it can be any digital assets that you invested in, it can be mutual funds, it can be shares, it can be, so other such kind of products that you invested in, and that's the asset that you have. So whenever you sell you need to pay capital gains tax on it. It's as simple as that. Capital gains is to be paid not just shares, not just on mutual funds, but on various other investments too. It is divided between short term and long term. Short term is when you are selling it very quickly. You bought it and you quickly sold it. So that's what short term is. Long term is you bought it, you had patience, you sold it after a year or 3 years as this allows, and then you sold it, and so accordingly the tax is paid. So obviously, if you have patience and you sell it later, then you will pay lesser tax. But if you don't have patience, you bought it, you made some quick money and you sold it, then you need to pay higher tax to the government. So the government does appreciate people with patience and who want to invest in long term. And the government also does not want to encourage too much of people who want, who do quick share trading. Aaj kharida, kal becha, aaj kharida, 2 mahine mein becha. So for people like that, they say, okay, karna hai karo, but just pay me higher taxes. Now, in short, most of the taxes are available based on the slabs that you are at. So slabs, you remember 5%, 10%, 20%. Whatever slab you actually land up at, short-term capital gains is mostly paid at that. So we mostly say short-term to 30% dena padta hai, long-term 10% dena padta hai. That's a, like a thumb rule calculation. However, in some cases, you also need to pay 20% in cash on long-term. But then there comes with indexation, no indexation, etc. Right? So there's slightly complications when it comes to that. If you don't take an indexation benefit, then long-term still at 10%. And 1 lakh rupees of capital gains, long-term capital gains, is exempted every year. So 1 lakh rupees of long profits, you don't need to pay any tax. The government says, ये मैंने माफ किया, इतना profit करना तुमको allowed है, इतने करोगे तो घर कैसे चलेगा? इससे ज़्यादा करोगे तो tax देना पड़ेगा. If you miss your deadlines, there are always options. So for people who missed filing their income tax returns for financial year 21-22, can still file their return. There is a new form which is just opened starting 1st April 2023. You can even go back and submit your returns there. There are some options. For example, you can't claim refund, you can't take carry forward losses. But if you have a simple return, then you can go ahead, file your income tax return. Filing of income tax return is important. It helps you in every process that goes right now. Helps you get a home loan. If you go for taking even a credit card these days, they ask for an ITR. If you go for a home loan, they ask for 3 years, 5 years ITR. If you're going to even apply for visa or if you need passports, they need ITR. So ITR and also credit history does not come unless you start filing your ITR. So there are so many reasons why you should file an ITR. If you have an income, file an ITR. If you don't have an income, file an ITR. If you have a child, file an ITR. If you have an aging parent, a senior citizen parent, file an ITR. Pay taxes, not pay taxes depends on what you earn. But ultimately, filing return is what you should always keep in mind. Okay, that is almost the end of this slide. I will love to take questions and answer your questions and go back to slide if needed. I think the team had Satvika, I think you had also received some questions. So if you want to ask me those, probably I can help you answer those here.
Yes, ma'am. So the very first question is comparison between new and old tax regime and any benefits and drawbacks if we switch.
So I just explained that, when you shift from old tax regime to new tax regime, what really happens. And if you are in the old tax regime, if you want to follow the old tax regime, or rather, if you are someone who wants to continue investing, old tax regime is what you should follow. But if you're someone who says, nahi, mujhe ab paise invest nahi karne, I will live for today. I don't know, I don't want to think about the future, etc., etc., then new tax regime is what you should go for. Does that answer the question?
Yes, ma'am.
Okay,
Thank you, ma'am.
great. So what was the next one?
So next one is how can we make for our pension in early 40s?
See, so pension is basically retirement money, right? Pension basically means that you don't have to work and money can keep coming into your account. That's what pension means in a very loose language definition. Now, for you to start getting pension at 40, you must have started investing in your 20s. Now, if you have started investing in your 20s, then you can still expect a regular income in your 40s. The so-called retirement investments that we do, that is pension, that is PPF, don't start coming in unless you cross 60. But if you want to, let's say, aim that, okay, by the time I'm 40, I want to start receiving 1 lakh rupees every month from my investments, and I don't want to actively work to remain a passion to me more than a requirement. In that case, you have to start strictly investing as soon as you start earning, hopefully early 20s, and invest a major chunk of your income in your investment. Then only can you start receiving pension from your 40s. But if you don't invest, there's no pension income coming in.
Thank you, ma'am. Our next question is, apart from index fund, what are other low risk investment options that has similar benefits?
Okay, so index funds we all hopefully know, but I'll just briefly give one line definition. So when you are investing in mutual funds, there are so many options. It's like an ocean these days that there's no end to the amount of options that are available. So when someone is really confused, what would you do? You would invest in the main backbone. What's the backbone? The backbone is Sensex when it comes to Bombay Stock Exchange, and NSE when it comes to National Stock Exchange, Nifty when it comes to National Stock Exchange. So you invest in index funds. Index funds, what will they do? They will invest in Sensex. They will invest in shares which make up for Sensex, and they will invest in shares which make up for Nifty. So you don't have to go running around. You just have to pick up the index fund because they will invest in Sensex and Nifty. Do they carry risk? Yes, even they carry risk. Are they safer than the various other mutual funds options? Comparison may, yes, because they will be investing in the biggest, better scripts possible. Sensex is made out of the best companies of the lot. And again, Nifty is made out of the best companies. So because it's picked up from best of the best, the risk is less. If you're done investing in index funds, however, that I have seen, you should have some index funds, you should have some mid cap, you should have some small cap and large caps also. Small caps are higher on risk appetite and large caps are lower on risk appetite. So large caps are companies which are much more popular, have a bigger, larger market capitalization, and are established as compared to the other smaller organizations. But you should have a breakup between all these 2, 3. What should be the breakup? Should be depending on what age you are at, what is the investment bracket you are looking at, how aggressive you are. So if you're early age, anywhere around 20, 30s, you can still get a little aggressive. But if you are touching 40s or if you're crossed 45, then it's a good idea to start becoming a little moderately aggressive, because there are lesser years now left to earn. So that's how it goes.
Thank you, ma'am. Our next question is, what is tax percentage deduction for 15 lakhs C2C?
So 15 lakhs comes under the highest tax bracket, which is technically 30%. And I've just explained and how you can try and save some taxes. So 15 lakhs, if you look at it, it falls under 30%, highest tax bracket possible. Now, whether you will choose old tax regime, new tax regime, whether you will invest in ATC, ATD, all this will decide how much tax you have to pay. But obviously, we could go back to that clear tax and quickly calculate ki kitna aane wala hai. We can do that later, probably. Yeah.
Yes, ma'am. Our next question is, what are tax-free return plans that exist?
Okay, so there are tax-free returns. Very few investment options available where tax-free returns are there. So for there's a concept called investment income and the redemption. There are 3 steps to any investment, right? You invest today, you earn interest or dividend on it, and then you redeem the money. So there is triple E, which is exempt, exempt, exempt. There is exempt, exempt taxable, and exempt, taxable, exempt. Triple E, which is exempt, 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 is very less. PPF is one of them because interest is taxable, but then you get benefit under 80TTA. So, a lot of it does not come under, you really don't have to pay any tax on it. So there are very few tax options. Some of senior citizen schemes are available where there is exempt, exempt, exempt. So if you are really looking for tax exemption schemes, then you are looking for triple E schemes. So what you can just do is look for triple E schemes, but there are very few available. Most of the income options these days, especially fixed interest options available. So for example, PPF, fixed deposits, post office, all these exemptions are only available when you are investing. जब आप इसमें से कुछ में जो मैंने अभी नाम लिए उसमें आपको इन्वेस्टमेंट और इंटरेस्ट और रिडम्पशन में भी मिलता है, बट लार्जली मैक्सिमम जितने भी बड़े अच्छे इन्वेस्टमेंट्स हैं जहां रिटर्न अच्छा मिल सकता है, वहां इन्वेस्टमेंट अमाउंट एग्जाम, तीनों में से कोई एक ही चीज एग्जाम्प्ट होती है, क्या तो इन्वेस्टमेंट एग्जाम्प्ट होता है या रिडेम्पशन एग्जाम्प्ट. So I have the list of questions. I think the next is it okay to invest in post office? Yes, it's okay to invest in post office. Post office is for lesser aggressive risk appetite. So you should, agar aapko mahine ka 1 lakh rupees invest karna hai, you should have some portion that you invest in safe investment options where there is no risk element available. It can be fixed deposits and can be post office investments also. So yes, post office is good enough. However, these days they don't offer much tax or let's say income interest benefit. So you may always consider the ease of operations before you start investing in post offices. If I have investment, should I go for new or old? I just explained. If you are someone who is savvy investor, who loves investing and who likes to invest, please go with the old tax regime. That's what is more beneficial. And the last question was how to save tax. I think we all are struggling with that. The maximum options available of how to save tax, I have already explained them to you. So Satvika, does that answer most of the questions? Do you still have more for me? Or I can just take the chat, the questions in the chat box.
Actually, we have more. Need
Please.
a classification for corporate tax and what are the criterias?
So for corporate tax, basically, in corporate tax, you don't have these slabs. These slabs are only these slabs only work for individual income tax filers. So for you, for me, for our PAN numbers. But if I have a private limited company or a limited company or a partnership firm, or not partnership, but I have a LLP. So these organizations are taxed at corporate tax, which is 25%. 25% of your taxable income. Taxable income is calculated from your profit after tax. So your PL will show profit after tax. The taxable income is calculated from that. What would be the exact taxable income will depend on, again, what deductions you have. No, sorry, not deductions, but there are ways of calculating corporate taxable income, which is largely depending on deferred tax and depreciation rate, etc., and except expenses which are not allowed by the government. But roughly, if I can put it, 25% of your PAT minus plus the various adjustments that could be done. Okay. Is it okay to invest in shares and mutual? I think Satvika just logged out. When she logs in, she can ask more questions. Is it possible to change individual loan to joint loan after years? Loveleen, I think you can. However, you need to obviously speak to the bank, and you should have a good enough reason as to why you want to do so. When you are converting the individual loan to joint loan, the banks would want to know obviously the reason, and also are both of you the property owners. So if only one of you are the property owner, then the banks may slightly not be very happy. However, if the person on whose name the loan was running, if that person's income has really come down, then the bank itself will ask for a joint applicant, because then they need more people to pay for the loan, right? So yes, it's possible. It can be done. Difficult, but not impossible. Rituja, yes, it's okay to invest in shares and mutual fund, but based on what your risk appetite is, based on what kind of shares you want to invest in, based on what mutual funds you want to invest in. Mutual funds and shares are also, this is my personal opinion, I suggest people to invest for long term. What is long? 3 to 5 years at least. So invest karo or bhul jao. If you keep buying and selling, then that's not investment, then that's trading. However, for someone like me who's extremely busy in my own work, I don't have so much time to keep buying and selling. I invest and I forget. That's what you should do. It's okay, but study, read, understand the companies that you're investing in, and then only invest in shares. Be very sure, learn about them, and then invest in directly equity shares. Mutual fund, trust funds which are performing well, trust good fund houses, and obviously read about them. Do your own research before you invest them. Don't just invest because Swati told you, or your best friend told you, or your uncle told you, or your aunt told you, right? Don't do that. So yes, it is okay to invest in mutual fund. I have been investing in mutual funds and shares, and I'm mostly very happy about it 99% of the times. Can we invest in kids who are under 18 years? Yes, you can. Suma, so you can file income tax return for minor kids also. However, their income is added to yours, but you can create their PAN numbers also. Yes. No, tax amount can't be free for them, because see, it is said that children below 18 years, which are minors largely, don't have the capacity to earn their own income, right? So if they are not earning their own income, the income in their books is actually coming from their parents. So no, that can't really be made tax-free. However, there is one exceptional clause. If you have a child who has a talent and through which they are earning. So for example, your child is an artist and is performing at events. So he or she is making their own money, right? Because of the talent that they have. There could be a performer, there could be a dancer, there could be coming in movies or serials for that matter. In cases like these, only as an exception, the income of the child is assessed or taken under the PAN number of the child itself. Otherwise, in all the other cases, the income of the child is added with the parent. Anima, the best way to identify there's no right or wrong here. What I mostly do, I will tell you what I mostly do is, okay, I go to the few common websites I can recommend you. You can choose any of them. I go to Money Control. I will go to ET Money. I will go to Grow. I will go to various other websites which lands up on my page. And I will look for what kind of investments am I looking at. Am I looking at large cap, which is less aggressive? I'm looking at small cap, which is high aggressive, or index mutual fund. And I will ask for best income index mutual funds. They'll give you a whole list. Have some patience, read about them. Because I have been reading about them over years, I know what are the parameters I want to look at. But for you, you should know what are the parameters you want to look at. You should look at what are the investments that they are doing. So every mutual fund goes further and invest in shares, right? So you have to look for which shares that they are investing in. And once you're clear, once you like those names, then only go ahead and invest in those mutual funds. It's not going to, it's not a tablet which you can just eat and know everything about it. It takes time. But don't wait for you to take time. Start investing today in some of the best index funds. By the time you enable yourself, attend more sessions at Her Money, and learn how to actually pick up the best mutual fund. Maybe Her Money, Nisri and her team can actually create a session where we talk about how to choose best mutual funds. Snehal, sportsman, I think, yes, you can file their own return. But please ensure when you say he's a sportsman or she is a sportswoman, the income that you're creating can have a chain. You can't just add 5 lakh rupees and say that he earned from a match, right? A sportsman earns while prize money and sponsorships, and they have to be banking transactions. And only then can you actually think of adding their income and filing it. However, please read it in a little detail. And I haven't filed for any sportsmen, but I have filed for some artists, and we've been allowed income under that minor child. So yes, it's possible. Suma, Zerodha is a website which offers Zerodha is a brokerage firm, right? It gives you ways to invest in various mutual funds on shares. But Zerodha is not the only one available. Zerodha is obviously a new age organization. But I've seen that there are places where brokerage is lesser in other options also. And mutual funds don't have brokerage, they have expense ratio, which a Zerodha can never decide. So mutual fund wale ka apna ek expense ratio hota hai. So for example, let's assume I run a mutual fund, right? So I will have 5, 10, 20, 100 chartered accountants and CFAs who will go and decide ki kis company mein invest karna hai paisa. I have to pay for their salaries, I have to pay for their rent, etc. And obviously as a mutual fund, I have to make money also. उसके लिए हम expense ratio रखते हैं. वो mutual fund की कमाई होती है, mutual fund house की. और ये आप कहीं से भी invest करेंगे, same ही रहता है. चाहे आप Zerodha से करें या कहीं और से. So brokerage matter करता है when you are buying equity shares, but when it comes to mutual fund, it's more on the expense ratio. So it's slightly different than brokerage. Suma, yes, you can do NPS also. However, do note NPS is on the safer side of investment. It is also for your retirement benefit. And for the new versus old, if you continue to stick in the old, yes, NPS you can do. Okay. Sneha answers your questions, Suma, I think. Snehal, sorry, is also answering. Yeah. Yeah, it's broking online transactions platform. So that means when you're trading in shares, brokerage is less. But when it comes to mutual fund, there's no brokerage, there's expense ratio. Okay. Any questions that I missed? Any questions that you want me to answer? I hope largely the concept of new versus old tax regime is sorted, because that's obviously has been made a big deal. Great, Snehal. Anima, I'm very much accessible on LinkedIn. I'm very much accessible on Instagram. On LinkedIn, I am with the name of Swati Singhania, and on Instagram, I am with the name of Swati Singhania Mentor. I will just share my handle also. I'm mostly very accessible, but yes, there are days when I just can't access my DMs, and sometimes I may get late. But I mostly try and respond to all the decent messages. Nasty messages, never. So that's my social media handles. You can always reach out to me there. And I'm mostly very active on both of them. And obviously you have the platform of Her Money. You can always reach out to them. They have various other experts like me. They can always get you a decent help from the best expert possible. Thank you, Bhaglakshmi. Thank you so much. Thank you, Rituja. So I think we are done. Nisri, you want to take up? Yes. I see 1 plus
Thanks
3.
so much, Swati, for your time. And there were a lot of questions actually been coming in. We covered everything. Thank you so much. Very informative, and you kept it very simple.
Thank you. I also tried and keep it as short as possible.
Yeah. Okay, thank you everyone. And if you have any further queries for Swati or anything related to your financial planning, do write to us at contact@hermoneytalks.com. And we will be sharing a feedback form also with you. So if there is any further questions or a one-to-one consultation you want to take up, we are always ready. Thank you so much. Have a great weekend too.
Thank you. Bye-bye.
Bye.